Puss. Good morning. Good morning, Dwayne Thomas.
Good morning, McGraw.
Good to hear your voice.
It's good to be here.
Yeah, yesterday, a bit of an interesting ride. We started off down, and then we came roaring back in the afternoon. What happened?
Oh, I'm glad to hear you're looking at the market all day long.
Of course.
Yeah. So we finished today up 142 points, closing at 26,214. You're right. The day started with a slight down and quickly turned positive when the political parties agreed to the short-term funding bill.
Gotcha. So it took off like a rocket ship again. Okay. Today, let's start with Netflix. Can anything go wrong at Netflix?
They've been an amazing company. So yesterday afternoon, they reported earnings after the close. They've added 8.3 million streaming users. They were expecting to add 6.3 million users. Of that 8.3, 2 million U.S., 6.3 million foreign. So they added as many foreign users as they expected total users. So they're exploding internationally. And the stock went up in after hours trading quite strongly and is passing the 100 billion market cap.
It should also be noted that Netflix started as a rental, right, where you could rent your CDs. Right?
Exactly. And the head guy, Reed Hastings, early in his struggling to build Netflix, offered to sell them to Blockbuster.
Is that right?
And got turned down.
Wow, that's an interesting story. All right, that's Netflix, just booming. I'm so glad you're here. What are ETFs and why have they been around for 25 years?
Okay, the first one started 25 years ago, actually yesterday. They stand for exchange-traded funds. So think of a mutual fund that trades on the actual exchange, New York Stock Exchange. So a regular mutual fund, you buy into it anytime during the day. All you do is you get the closing price of the day. On an ETF, exchange-traded fund, you buy shares on the exchange throughout the day, 9 a.m., 10 a.m., 11 a.m., throughout the day. And same with selling. And, you know, a regular mutual fund, you may try to sell at 9 in the morning, but all you do is get the closing price. So some people think it's a little more efficient because of that. The other things about them is the first one, symbol SPY, and they use the phrase SPIDER, is the S&P 500 index. The ETFs are really a collection of indexes or indices, however you want to call them, and they may be a sector-oriented fund, you know, maybe just robotics, maybe just gold, maybe just financials, maybe large banks, maybe small banks, but sector, you know, so index or a sector. They also, because they're not trading in and out of many securities, but own and just basically own and grow in a specific sector or index, they tend to be, one, a lot more tax efficient, less capital gains at the end of the year. Obviously, I said they trade midday. You can actually use a stop loss on one if you want. So it's a trading style if you want to use some of that. Often they're lower cost. So it's a very, very different style. They're growing at a very, very rapid rate.
Well, I could
say 25 years old.
It sounds like it's a much better option than just a regular straight mutual fund.
You know, I would have to say they're different. You know, there's some naysayers who say when we have a really bad market, these indexes, they're fully invested all the time, where a mutual fund may be raising cash at various times. They have different strategies. So that each has their own benefits and detriments.
Sure. And they've been around 25 years as of yesterday.
Correct. And the regular mutual fund's been around about 80 years.
Yeah, interesting. All right. And then finally, what's going on with Johnson & Johnson?
They reported earnings this morning, bright and early. For the quarter, they made $4.78 billion. It's $1.75 a share. This is a big story to me. Their revenue was up 11.5% to $20 billion for the quarter. You know, this is a company that sells everything from Band-Aids to high-tech drugs to a lot of surgical equipment. Basically, everything in the medical world, from the smallest to the biggest. And to grow at 11.5% at their size is a pretty impressive statement.
Do they've got connections to St. Louis, don't they, in some way?
I believe they do, but I don't recall.
Yeah, I think. Yeah, I know they've got some connection somewhere along the way here in St. Louis. All right.
I would say one thing. They've made so many acquisitions over the years, so I would bet money they've made some acquisitions of some St. Louis companies.
All right.
Through there.
Dwayne Thomas, how the markets look today?
We look to start up about 20 to 25 points on the positive side. We're digesting earnings. Procter & Gamble, Verizon also report this morning, so a lot of earnings being reported right now.
Dwayne, have yourself a good day. You're with us all week, correct?
Exactly.
Look forward to it. Have a good day.
Thank you.
Dwayne Thomas with us, Senior Vice President Investments and Branch Manager of the Clayton office of Stifel Nicolaus.